May profits be upon you. Welcome to another weekly Forex forecast. In this video, we're going to feature the Japanese yen futures and US dollar JPY. All right, first, we're going to look at the Japanese yen futures. We're going to look at the currency strength itself. That way, you can better gauge it against US dollar and the other currencies. All right, now we're looking at the monthly time frame. And as you can tell, if we just pan out, you can see each candle is a month. It's been bearish for years, okay? And over the last few months, you see the Bank of Japan, the BOJ, uh, uh, kind of adjust their policies and intervene at times, and you can see where they intervene really. But uh, I want you to see that the price action has been pretty predictable. You see the buy up before the sell down, creating an area of fair value. Price comes back into that area of fair value, and impulses again to the downside, creating another uh, market structure shift, just like this one, another area of fair value. Price comes back up to do what? Mitigate that fair value and continue down. All right. Each time it goes up, I tell you, if you've been watching my videos, you'll know that each time that it goes up, I'm saying, okay, I'm waiting for it to hit an area of value, or an order block, or an area of supply, and impulse down. And each time it did it, it was very predictable. And this is a dependable uh, currency in that regard. It's bearish. That's it. All right. And but as of the last 2 months, look at the last two monthly candles. You can see that things are starting to turn around. Things are starting to turn bullish. All right. And over the last 2 months, you can see, if we go to Dixie, the last 2 months have been dojis and sideways. All right. Why? Because we hit a big old area of supply, and prices starting to respond, or starting to react to that area of supply. And it looks like we might be turning around. This is a one tick doji. And when you see these one tick dojis, I just want you to take a mental picture, a snapshot of it, because it's going to signal, it's usually signaling that price is about to turn over. We'll see. We'll see. But I want you to start taking mental snapshots of that. Okay, so we're bearish in uh, the monthly time frame, right? Now, I want you to pay attention to something. All right. If price takes out that high as it moves up, then my bias will start to change. This is a market structure shift to the upside, a bullish one. All right. You wait till price pulls above it, and then pulls back into an area of demand this time to continue higher. All right. Instead of it finding supply and then continuing lower, we're going the opposite direction. All right. So that line, that area, I have it dotted here. Uh, that is at 0.06815. All right. And the price hits that, it's going to take a while. It might take a few weeks to get there, a couple of weeks to get there. But that is where that's the area I'm watching as price starts to gain strength. All right. And if we go to the weekly, you can see that the weekly candle that just closed for last week closed well above the high of the previous candle. Now we're going into an area of supply, an order block, a bearish one. All right. Normally, this would mean price is going to turn around. But if the intent of price is to gain strength as the US dollar weakens. This is going to go higher. So I'm definitely watching this last line of defense by the sellers. All right, this is the last line of defense. Once it breaks this, it looks like we're going to be turning around to buyers. All right, the buyers are going to be in control right now. The sellers are in control. We're heading towards the consummate encroachment, the 50% of this order block. And I want to see how price responds to it. If we get a close above it, yeah, it's starting to look like we're going up this way. Once we take this high out, excuse me, then this high becomes a buy side liquidity target. Okay. So we're going to watch. All right. If price reacts to this, I want to see if it reacts past that low. That's what I want to see. All right. If we break that low, then we're going to continue that bearish flow. Yeah. Let's go to the daily so we can see some details. Okay. The only detail we're going to see is how price took out this low, took the liquidity, and we're now pushing up. And we're at an area where this was a weekly fair value gap inside of the supply. All right, there's good reasons to think that price will turn around here. I think we're going to respond to it, though. I think price is going to respond to it. You see, we have that one tick doji up there. All right, that usually means price is about to turn around. All right, doesn't mean it's going to go to the to the swing low, but it could mean that this bullish fair value gap on the daily is going to see price come into contact with it, and I'm thinking that we it might find support here. All right, in between these two opposing fair value gaps. One is higher time frame. This is daily. This is weekly. So this is going to be a very interesting situation here. I'm I'm looking. This is what I'm looking for. Boom, 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 boom. All right, but it might go like that. So we'll see. We'll see. You know, this is something that you want to kind of be on the sidelines with. You don't want to be taking shorts into this, and you don't want to be taking longs into that. Don't take shorts into demand. All right. Do not take. I mean, well, this is a bullish fair value gap. I wouldn't want to take a short into that, and I wouldn't want to take a long into a daily uh, fair value gap either. So I would say we'll wait till see. We'll wait to see if one of these fails. All right. If one of these fails, then you'll know which direction to take the Japanese yen. All right. Now, fundamentally, though, it should be heading up. It should be gaining strength like it has been for the last 2 months. Okay. Now, if we go to the US dollar JPY, those who like to trade the FX with FX brokers, all right, it's the same thing, just the opposite. All right. The markets, the markets have come into an area of fair value, a bearish order block. You see how it pushed higher, higher low, and then a higher high into this order block here. All right, and then we had this bearish response that is natural, and you'll see that what you have to interpret here is that the Japanese yen is now outperforming the US dollar. Okay, it's pulling it down. All right, now this will, once it goes past this low, all right, that should be a protected low because it's in an area of demand. We went higher, we went a high, higher low, higher high. This should be the higher low to make the higher high if the US dollar was still strong and outperforming the yen, but that's not the case. I'm thinking that just like in the Japanese yen futures, where there's an area of that supply, I'm thinking that's going to fail. Just like I think this area of demand is going to fail. I think price will pop up and then uh, may pop up anyway, pop up and then come down. There's a lot of room for a bearish fair value gap to develop here. With a bearish candle here, it could leave a bearish fair value gap for a price to tap into and continue down. Hence my little arrow here. Okay, that's what I'm watching out for. I'm looking at this as the last line of defense for buyers. If this fails, then we'll be looking at lower prices as the Japanese yen outperforms the US dollar. All right, if we look at it on a daily, uh, it should be just as clear. All right, and we have a fair value gap here. I'm sorry, I didn't mean to. That thing is driving me. That magnet is driving me crazy. We have that. We have the. If you look closely, you can see that one tick uh, uh, doji here. We might see price pop up. We could see price. Hold on. We could see price pop up from here into this bearish fair value gap here, and then we can see price pushing down. We could see that. We'll see how it shakes out. All right, it could, price could come all the way back up here to this area of supply and then come down. We'll see. All right, CPI data is Wednesday, so be careful on trading up until Wednesday because that could reverse the markets. That's a high impact news event, so you want to be careful. All right. And there you have the Japanese yen analysis. I hope you enjoyed it. If you have any questions or comments, leave them in the comments section. I love to hear from my viewers. And do be sure to hit the like button and the boost. Hit that boost button, and it helps my channel to grow. And that's all I'm asking from you. All right, for this free content. Hey, may profits be upon you. I'll see you in the next video.